Alright guys, it's your boy Joshua. Once again, you are welcome to my channel, Discipline Trader. So the purpose of me making this video is concerning those beginners who are struggling with candlestick or how to understand candlestick, or who wants to really understand what Japanese candlesticks are and add them to their trading confirmations. So if this is actually what you are looking for, please do well to like, subscribe, and most importantly do well to turn on that notification bell so that you get notified whenever I upload an important video like this. So in this video, what we learn about what are Japanese candlesticks, candlestick autonomies, which is dealing with the basic parts of candlesticks and the psychology behind candlesticks, and most importantly how to trade Japanese candlesticks. So do well to watch the video to the end, and after this video you will be able to trade with candlestick as one of your most confirmation before entering a trade. So without further ado, let's completely all dive into the chart and let me show you why we are here.
The first one we are seeing on the chart is what are candlesticks. Candlesticks are ways of showing how price move in the market. It shows where price have been, the current price is at, and it tells us where price will potentially go. Candlestick autonomy and parts. Now, just as human beings, candlesticks have different body and sizes. It is very important to know and understand the psychology of candlestick as a trader, because it is the best language you will be speaking when you are on the chart. So what we are seeing here is definitely on the left side, you are seeing the red candlestick. The whole box that is being colored red is called the body of the candlestick. It's called the body of the candlestick. Why? A bearish candlestick will open at the top. The bearish candlestick will always open at the top, as you can see, open, and it will close at the bottom. And this long thing pointing up is actually called the wick. It's actually called the wick, and we have the upper wick. Looking at the bottom side, you also see another wick, and it's showing the lower shadow also. You can also call the wick a shadow, depending on which one is actually good for you. And on the right side, you're also seeing the bullish candlestick, which is the whole place mark or drawn the box with green. You can color them the way you want, but for this example I'm using a red candlestick and a green candlestick, because a bearish candlestick is the one that pulls price down, and a bullish candlestick is the one that takes price up. If price is going to the upside, you will be seeing a lot of green candlesticks, and if price is coming down, you'll be seeing a lot of red candlesticks. And also the autonomy or the parts of a bullish candlestick. A bullish candlestick will open in the downside and close at the top. So we are seeing the wick also, the wick or shadow, and this is the upper shadow. And also we are seeing the wick on the downside, which is the lower wick or shadow. So this is the autonomy of candlestick. Candlestick have four parts. So we have the wick, we have the close price, we have the open price, and the body. So this is for the bullish candlestick. And for the bearish candlestick, we also have four parts in candlestick. We have the body, we have the open price, we have the close, and we have the wicks. So this is the autonomy of candlesticks and parts.
So before I dive into the other side of candlestick, which is the candlestick types, I want you to understand that there are a lot of candlesticks in the chart when you see or when you go into the chart, but I will be giving the most important one I use, or most traders, professional traders use to trade or add as a confluence, confirming their high probability setup. So let's go.
So looking at candlestick type, we only have two types of candlestick, and we have the short, we have the long. We have the short also in the bullish side, and we have the long. Now this psychology behind this short candlestick, it means that price is not having more strength. while the big candlestick means that price is having more strength or having a greater strength than the smaller one. The same thing goes to the bullish candlestick. This small one means price is not actually having more strength, and the big one means that price or the market have more strength. This is why it formed this big candlestick. So I hope you also get it.
The next one we are having on our list is candlestick patterns. Now, these candlestick patterns helps you to anticipate where price is going to go next, but it's not advisable to only use that candlestick pattern only as a confirmation. You still need other technical analysis like indicators and different type of strategy to also anticipate that move. But let's go into the candlestick pattern. Now there are different or plenty type of candlestick pattern, but I'll be giving only 6. So the most important ones, the candlestick pattern, like you have the bullish engulfing pattern, you have the doji candlesticks, you have the hammer pin bar, and so on and so forth. But I will be giving only the most 6 important candlestick you will mostly see on the chart. So let's go.
So what we have in here is called the bearish engulfing patterns. Now, these are, the bearish engulfing pattern. So this psychology behind this pattern is that a short candlestick will form, and the next candlestick that is going to form will definitely be more longer or bigger than the previous candlestick. Candlestick pattern consists of either 2 candlesticks or 3 candlesticks, 2 or more candlesticks. So this candle we are seeing is bearish pattern, where the previous candlestick is going, or where the present candlestick, where the current candlestick will be bigger than the previous one. So this is called the bearish engulfing pattern. You can also see a red candle at this point, and you can also see a red candle at this point. But for this explanation, I'm actually giving you a bearish engulfing. Bearish engulfing is when the current candle is more greater than this one. We all know that bearish candle is actually the it actually represent price going down, right? We all know that this is what the bearish candle does, if you already know. So bearish candlestick is representing a down move, and once it engulfs the previous candlestick or the previous candlestick, it means that price is actually giving us a signal. This pattern is telling us a signal that price is coming down, that sellers is greater than the buyers. So I hope this sinks in. And for our bullish engulfing pattern, you can clearly see that the current candlestick is actually greater than the previous candlestick. A bullish engulfing pattern is where the current candle is actually taller, or say taller than the previous candlestick. You can see this one is short and this one is actually big. So remember, this is a bearish candlestick, right, showing red, and this is a bullish candlestick showing green, excuse me. And you can clearly see that we already know the open price of a bullish candlestick. It opens here and it went up, breaking past, becoming greater or stronger or even taller than the previous candlestick. This is telling us that bullish is actually in the market right now, that the bullish price is actually going up. So this is what it means as a bullish engulfing candlesticks. So I hope that is clear. So the second one we are having here is called the doji candlestick. If you look at the left, we are having a bearish doji candlestick, and we are also having a bullish doji candlestick. Now, the psychology behind this doji candlestick is, we all know that price move up. We all know that price move up, and price also move down. But for the sake of this doji candlestick, price did not either move up or move down. We all know that as a bearish candlestick, let me put something for you guys to see. As a bearish candle, okay, let's use the bullish candlestick. As a bullish candlestick, we are having the open price here, where price opened from this point and went up to close at this point. So, and also we are having the bearish candlestick also. You're also having the bearish candlestick where price, excuse me, you're also having the bearish candlestick where price will open at the top and closes at the bottom. So this doji candlestick tells us that price neither went up or price did not go down, but it actually closed at the same area. As you can see, price neither go up nor down. It closes, it opened and it closes at that same point. It did not go anywhere. So this tells us that this is just the psychology of a doji candlestick. Remember, these are the most important candlestick I'm actually giving you, because I'm about to tell you the reason and why it happens, or how to use it as a confirmation during your trade. So let's keep on watching this video till the end. So what we are seeing here is called the hammer candlestick. This is a reversal candlestick. When this candlestick occurs in a downtrend, just know price is about to shoot up. As you can see, price opened at this point right here, but seller managed to push price down, but unfortunately buyers take it up and close above. So when you see this, just know price might have the potential to keep on going to the upside. On the bearish reversal pattern, is called the shooting star. So this shooting star happens to be price actually open at the top right here, but buyers try to push price up. They definitely did, but sellers overpowered them and they also push price down to this level right here, and it closes. So this means that sellers is more stronger than buyers, and it is a reversal pattern. If you see this in a uptrend, just know that price might have the potential of coming down. Now this is what I mean. Price open right here, right? Price open here and buyers push price up, but unfortunately seller push price passing this our opening price and comes down and close. So this means that sellers is more stronger, so price might be have the potential of shooting price down like a shooting star. So this is why it's called the shooting star. What you are seeing next on the screen is called the morning star candlesticks. This candlestick pattern. This candlestick pattern represents a bullish move for a morning star candlestick. Now, the psychology behind this candlestick, as you can see on the left, you can see a bearish candlestick, while the second candlestick is also representing a bearish candlestick, which also means sellers, while the third candlestick is representing bullish candlestick, which means buyers. Now this means this first candlestick as a bearish candlestick, sellers is still in control of price, which means price is pulling down, right? Price is pulling down, and also this other second one means that price is also pulling down. But now the third candlestick appears to be a bullish candlestick. You see, a bullish candlestick. Now this means that buyers have stepped in the market. Now there is a high probability of this candlestick pattern giving us what we need, which means going up when it occurs in a downtrend or in a very low price. The evening star. This pattern actually represents a down move, because if you look at the present price, where price opened at this, when a bullish candlestick opened at this price and went up, it gave a strong bullish up move. As you can see, it gave a strong bullish up move, while price actually comes down again and printed another bearish candlestick. Now you might be wondering why I put a bearish candlestick at the second part. It doesn't mean it can be a bearish candlestick or it can be a bullish candlestick, but as long as the third candlestick is engulfing this our previous candlestick, just know that the pattern has formed. So you can see it. Yeah, an evening star consists of 3 candlesticks. An evening star consists of 3 candlesticks, which is, you see, buyer try to push price up while it closes, and sellers are trying to push price down and they successfully push price down, which is called an evening star. So just try to get what I'm trying to explain here. If you are not getting anything, please do well to rewatch this video and try to get it. Watch the video over and over again so it can definitely sink in very well to your understanding.
So now we have understand what are candlesticks, candlestick autonomy and types, and candlestick patterns. So now let's go to the chart and I'll show you how to trade using candlestick.
The first example I'll be giving is the hammer candlestick. If I zoom If I zoom in, you see this candlestick. This candlestick are you seeing right there? This is the hammer candlestick. If you look at price was previously coming down. Let me pause this. So if you look at the trend, you see price is actually giving us a bearish candle move, a bearish candlestick until price came to this area. Price came to a particular area which is at the bottom. Remember, I said most of this candlestick will have a high probability or have more potentials of you know giving you what you want when it happens either in the bottom or at the top. It's not going to work properly if it is in the middle of price. It's either happening on the bottom or happening at the top of a price. So right now we are seeing a hammer candlestick. Now this candlestick is representing a bullish reversal. Price was actually in a bearish trend, but it came down to a particular area. Like the momentum of price is actually in a down move, but it came down to a particular area and now it's going up. So if you were to see this kind of move, you want to wait for this candlestick to close. Now let's wait for the candlestick to close and let's see what really happens. Let's wait for it to close. Okay, now the candlestick are closed. This is where we want to put our buy tools, if because we are buying. This is actually bullish reversal trend telling us that price will still be going up. Yeah, this is what I mean. This candlestick is saying that price will still be going up. So let's put our buy tools at this area right here, and our stop loss should be above, below, because this is a buy move, so it should be above, and we will be targeting this this eye right here. The nice one is to 3, and let's see how it actually plays out. Let's see. Okay, let's see how it plays out. And boom, there we go, guys. There you go. Price definitely smash our take profit. Yeah, price actually smash our take profit. Let's see if it taps our take profit. I'm not sure. I'm not actually sure. I'm not sure. Wow, this is so definitely good. Well, all right, guys. As you can see, you can see the prediction where price actually printed this hammer candlestick. As you can see, this candlestick right here. This was the signal we used to anticipate this up move. Well, price actually went there and take us out of the trade. I think I actually put on the wrong take profit. It was this eye I was aiming. It was this eye I was actually aiming. Let's see. It was this eye. If I zoom out, you see the eyes right here. Okay, price actually took us out. Like it actually hit our take profit, as you can see. So this is the power of the hammer candlestick, bullish hammer candlestick. As you can see, definitely there's no bearish hammer candlestick. We only have one hammer candlestick representing a buy signal. So when you see this hammer candlestick, you want to wait for the candlestick to close as a confirmation. Yeah, you want to wait for it to close, and you just put your buy tools as the current price. Put your stop loss below the candlestick, quick. As you can see, I put it below the candlestick, and price when they take us out our take profit at a nice 1:3 risk to reward ratio. So let's move on. Okay, so as you can see, you can clearly see that price is actually trending to the upside. So now we are looking for possible buy. We want to look for a buy trade. Now let's mark our zone. We have marked this complete demand zone. This is our complete demand zone right here. Boom. So now price have tapped into our demand zone. What are we going to look for? Let's wait for a nice candlestick pattern so we can get in for the trade. Now let's watch for a nice candlestick pattern. There we go. So as you can see, let's wait. Okay, let's wait for price to close first. Okay, what do you see? We just see a nice morning star candlestick represent 3 patterns. You can see this red one, and you can see this green one, and you can see another candlestick engulfing. This means the reversal pattern. Price is about to reverse. So now price have actually closed, and let's take the buy and see how it actually goes. Let's see. and let's target a nice 1:2 hour. Okay, let's target the 1:2. So let's see how it goes. Let's see, let's see, let's see how it goes. And boom, there we go. As you can see, the if Morningstar candlestick actually work for us, it definitely work for us, guys. As you can see, a nice candlestick confirmation actually help us to win this trade. So it's very simple. You just need to know exactly where candlestick is going to form. Yes, it's form. It didn't. If you see, it didn't form at the top. It actually form at the bottom because price is actually in a uptrend. You want to wait for price to reverse to a little pullback or a little retracement, then you look for your candlestick confirmation. Or if price gets to your zone, just as price gets to my zone, and I waited for a nice candlestick, a nice Morningstar candlestick as a confirmation before taking that trade. As you can see, a successful one. Nice 1:2 risk to reward ratio, guys. So it is what it is.